Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURJPY because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see is that we have a market which at the moment is testing a very strong area of previous monthly resistance from which all this move to the downside was created, confirming it as a strong supply and resistance area. And after that, the market broke above the area last month with this monthly close above the zone. Now, as you know, previous resistance, once it is broken to the upside, is turned support. So what we just experienced here is a retest of previous monthly resistance turned support, and the market started rejecting it to the upside. So in a situation like this, what we could expect is for the market here to create more bullish continuation. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how this area was acting as resistance here, again here, again here. So we can see in an even more clear way how strong this area is. And what we can notice is that also from a weekly perspective, the market here closed above the zone, went for a retest last week and started rejecting the area to the upside. And in a situation like this, also here we could expect more potential bullish continuation. We can also notice how we had this impulse to the upside followed by the correction. So if we want to measure this correction after the impulse, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has retraced exactly to the 50% of the Fibonacci taken on the weekly impulse, which was lining up perfectly with previous resistance turn support, creating a confluence of support at this area that we could expect the market to reject to the upside. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that the market has just created an M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern itself at the previous support turned resistance. So here on the daily, what we could expect is for the market to create a potential rejection higher for a completion of the pattern at this previous support and resistance, which is in fact exactly what the market did. And in fact, I did make a full breakdown of EURJPY a few days ago when the market was here, explaining all the reasons for which we could expect this rejection to the upside. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, what we can notice here is that the market not only completed the M pattern at the neckline, but also broke now above that neckline, which is now previous support, which was supposed to be turned resistance here, failed in acting as resistance, and now that the market is breaking above it, is turned from previous resistance to now turn support. So if the market here will complete this impulse and go for a retest of this area, this would be a strong support area from which we could expect a potential rejection higher. Basically for the creation of this inverted head and shoulders with the left shoulder here, the head here, and the right shoulder at this level. So this is a very interesting zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports, we went from having a negative net positioning of minus 47k net positions with 249k shorts compared to only 202k longs, all the way up to now having a positive net positioning of 105.7k net positions with 13k longs added with the last report and 17.8k shorts getting closed, reaching 239k longs compared to only 133k shorts. So the euro is getting quite strong, and the JPY, we can see how it went from minus 25 to minus 77k net positions, getting very negative net positioning, and a strong euro and weak JPY from an institutional perspective is exactly what we need if we are to get this rejection to the upside. So if the market will create a correction to this support, how we could be approaching this potential longing opportunity away from from this support. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for this potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which there is a big discount on the upfront price of the program. And since I have partnered with the Forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. So if you scroll lower, you will see that at the moment there is still time to join with the current offer before the timer goes to 0 and the price goes back to normal. However, spots are limited, so if the spots get filled before the timer goes to 0, the offer will end anyway and the price will go back to normal. So I do suggest that you take advantage directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.